Good afternoon. Welcome back to the Daily Squeeze. Brian Farr here. Hope everyone has had a fantastic long holiday Easter weekend. The market's a little bit on the slippery side today as all the indices except the QQQ finished a little bit positive there, but SPY, the Dow, especially the Dow, and the IWM small caps definitely feeling the heat from rising yields today. We got a lot on the docket this week as far as the economic calendar goes. We got a lot of jobs data. We also got a lot of Fed speakers out there this week, so it's going to be a little bit of a nonstop episode this week as we progress forward. But today, New York Stock Exchange breadth was about 2-to-1 decliners over advancers just because of the rising yields today. We did get some ISM manufacturing data this morning. So all in all, a little bit interesting. Gold also hitting fresh all-time highs. But nonetheless, we did finish red, like I said, but it was a pretty fun day trading session. We did a lot today, it seems like. So let's get into it. Today is April the 1st, April Fool's Day, hooray. And yeah, ended on a red note, but no, not the account though, but just the market ended on a red note. We were positive on the day, ching. But all right, let's get into it. This is your Daily Squeeze. All right, as you can see here, this is a line graph of today's market action. As you can see, we started out somewhat towards the upward direction here. We did look like we were going to get a nice little gap up on the futures during the overnight session. At one point, the NASDAQ was up nearly about a full percentage point during the overnight, but that was quickly erased as we got closer to market open, and the momentum just did not stop to the downside. Yields kept going higher, and in fact the market just couldn't regain its strength, although there was some relative strength names out there, especially in Google, and we'll talk about that in just a second. But as you can see here, if we look at the yields here, this is the TNX on a 15-minute chart. Yields spiked all the way up to about 3%. It says 2.65, but it's close to it's close to about 4.3%, as you can see here on the right hand column. 4.3%. As yields move lower, that definitely created some pressure for stocks in general, and SPY and rate sensitive IWM just couldn't handle the heat. You had energy and oil leading the way today. So all in all, a pretty risk-off session, but it was a fun one, no doubt about that. If we bring up today's trades here, this is the SPX. We didn't get into SPX until later into the day, but we took a call credit spread on the SPX. I was a little bit aggressive on it because I missed the initial down move, and as you can see, the yellow line is the anchored VWAP from this morning. We got this nice aggressive move to the downside. I was waiting for a pop to take advantage of a little bit more credit, but we never did get that initial pop. And I was like, you know what, I missed the first move. And if we take a look at the tick readings here, we can see that the ticks were pretty darn bad here. You can see this white moving average line wasn't even getting close to zero, and all these ticks, we were just getting a few bounces above zero, but they were coming right back down. So to me, it was just like, okay, this is pretty bearish. I mean, our first positive 600 tick reading didn't come till about 1:30 in the afternoon, and even still it got slapped right back down. So I did go a little bit aggressive on my put credit spread with the 52.45 52.50 put credit spread there, 52.55 52.60 excuse me, call credit spread to the downside. Got $1 in credit, and we just pretty much rode that all the way throughout the rest of the day and ended up keeping the entire credit. Later on in the day, I did take a SPX call here. I was looking at, let me bring this up to a 1-minute chart. My first attempt was right here when we were trying to break out. This was about 3 o'clock. Or so. We started to break out above this 52.40 zone, 52.41, and we immediately got slapped down. So I got stopped out of the original position, but I got back in once we started to creep back up here. RSI was turning positive on the new higher low, and off we went. We caught a nice green candle here right before the session closed, and those went from 85 cents all the way up to $3. I think they hit a max of like 3.30. So we almost nailed that to a T during the later part of the session. But all in all, it was a fantastic trade, and on top of that, we got to keep the credit from the call credit spread on the downside. As far as everything else goes, it was pretty interesting. We took Amazon from the beginning, if that'll pull up. We took Amazon from the get-go, and that hit our target pretty quick. This was on our DadVantage report this morning, and I was looking for calls above 181.42. We got this nice little breakout, and we hit our target. It hit a full 183, and this trade took like less than 10 minutes to hit. We were in and out pretty quick. It hit our target, and that's all she wrote. So Amazon was a pretty straightforward play for me. We then got into Tesla puts early on, and Tesla's been one of those plays for me lately that it's just been a little bit difficult, so I didn't go too heavy on this, but nonetheless it worked out pretty darn well. I got into Tesla puts right when we initially started to break down with a stop at 176.21, had a double top and it came right back down, and that ended up paying pretty well. We got in at $3.10, and I got out right about $4 right when we hit 172.61. So all in all, it was a pretty good play. That was our fib extension target. We did end up going all the way up to that 100% fib extension target, although by that time I was already out. But nonetheless, I think Lady also had a play in Tesla too that she scored pretty good on. She also had Lady Leverage had a fantastic day today. If y'all haven't checked her out, be sure to definitely do that, because she was kicking booty today. Also got into some Microsoft position. That one was kind of messy on my end, to be honest with you. Looking here at the daily chart, I went long. I got a little bit of gain on it, and then I took my eye off of it for just a brief moment when Tesla started to run, and by that time Microsoft had started to slack off as well. So I had to I took off for some gain, and then I gave a little bit back when it pulled back. So that was a miscue on my end, but nonetheless. And then, Google. Yeah, let's take a look at Google. Google was a fun little play today. Looking at Google, you had this beautiful breakout into lifetime new highs. Fantastic close. But after we got this breakout, she just turned sideways, and we got into this pretty just sideways consolidation. You could argue it's a flag trying to break out here on the 15-minute. If we get the continuation pattern tomorrow, it's going to pay out nicely, but if we get a gap down on the overall market, it's going to hurt, because it is a weekly contract. We are swinging the weekly 155 calls there, so we'll see what happens here. Hopefully we get a nice little move here. But all in all, I did want to come over here and just look at the daily picture of the market. The SPX, it's still in an overall uptrend. Nothing too damaging has been done today, although it does look like a mean downward day, especially with that shooter candle on on Thursday. So if the market does want to pull back, it's got a lot of wiggle room to pull back, but I think we do get some support down here at about 5,200, although that's about 240 points further down. So yeah, we're still a little extended as far as where the main moving averages are, but all in all, we're doing okay. It's still a very good uptrend. If we look at the Nasdaq's been in this little holding pattern for a while now. We need to clear about 447, 448, or if we lose 442. If we lose 442, then look out for some downside potential there for the Nasdaq. And then the IWM, this one's just a little bit interesting. We've just kind of bonked our heads on 210, and if you scale this out on a weekly time frame, you can see this whole entire area is pretty much a nasty resistance zone, and the IWM, it loves to trade in ranges here, and until it breaks out, we'll see what happens if it will draw the box there. Yeah, and you can see we're right at the top of this range here, so this is a big crucial level here with IWM. Like I said, IWM loves to trade in these zones, and you can see here we developed a range between 210 and 160. We kept bouncing around. We finally got a little bit of a mini breakout at about 190, and we're trying to see if we can get back into this prior range that was maintained back in 2021, 2020. So we'll see. IWM's, it's very sensitive to the rates and all that. All bunch of the junk small caps are in there. But nonetheless, looking at the Dow Jones just can't seem to break 40,000, 4,000, whatever, 40,000, and we're just kind of stable here. This is your weekly chart. Daily chart just kind of looks very similar to the Qs. We're very sideways, and until we break out of 398.80, then you got 400 in play. But for now, we're just kind of stuck waiting for now. We got a bunch of jobs data. Powell didn't give us much on Friday. He's still in this wait. He's being very patient as far as the data goes. We got tons of Fed speakers to go through this week. We'll get a little bit of clarity from that. But overall, this is still a very, very bullish market. Maybe we're turning a little bit sideways here, but the path of least resistance is still very much so higher. So let's keep at it. And all right, that'll do it for here. Good trading session overall. We'll be back at it tomorrow, of course. Y'all have a great rest of y'all's evening. Be good, everybody. Take care. Bye-bye.